Hi guys, and welcome back. Today I'd like to go over Elliott wave principle and why it's more of a art than a science. So here we can see basically ripple compared to the dollar and how it's structured in a 1, 2, 3, 4, and then in the future possibly a 5 wave up. And we see how ABC corrections form. Just going back to the principles of the theory here, you can see how it should be 1, 2, 3, 4, and the fifth wave up. So ideally you don't want the fourth wave as you see it here overlapping too much with the second wave here, but sometimes you will see that in an exhaustive fifth wave. So if the fifth wave is really losing buyer support, you'll see that the waves of 4 and 2 overlap somewhat. So 4 might come down into the territory below where the number 1 pivot might be. And in the structure, you also see how ABCs are formed. So it's a 3-wave corrective move. So from the top of your fifth wave impulse, you're going to come down into an A wave. But you should be able to break down the A wave into a 1, 2, 3, 4, 5 on the way down. And then your corrective move up from A to B will break down further into an ABC pattern. And then once again, you'll see a 1, 2, 3, 4, and then fifth hitting the final wave, which will form the final wave of a C wave. And you can see this is part of a larger pattern. So this is a major flow up to 1, and then a minor correction down into 2, and it's just part of a larger pattern here. We can see how it breaks down even further, and this is where it starts to get more complicated and convoluted. Ideally, you just want to simplify it so you have a general gist of where the market's going, because as soon as you start counting these minute waves into here in like a 5 or 1 minute chart, you're going to get into a lot of just unnecessary stress. So stick to what you can see in the higher time frames. Ideally, you want to see this on a 4-hour chart. Anything lower than that, you're just really getting into the weeds and tiny minutia, which will just confuse you more than help you. And Elliott wave should be simple and it should be helpful. It shouldn't confuse you or add another layer of stress to your trading system here. And so what I interpret this as is you can look at it as a Mandelbrot set, right? So Mandelbrot is a complex formula when put into like a geographical format on a computer. You'll see it appear as this symbol. But as soon as you zoom in, you'll start to see that you'll get these other parts of it. And when you zoom in further and further, you're starting to see this pattern form in the tiniest parts of the Mandelbrot set. And what you're essentially looking at is it goes on for infinity, right? So this tiny part here where you see the Mandelbrot occurring, it's just one of these parts. And you can zoom in for infinity. And that's sort of the same idea with Elliott wave. You'll get times where there's just not enough volume and it'll just chop sideways. And that's okay. That's just part of the game. So you understand it and recognize it. It's not always going to play out right away with super speedy moves. It's going to be drawn out sometimes due to low volumes. And so when we look back here, we're going to see ABC correction here, and then a 1, 2, 3, and then possibly 3, 4, fifth wave up, right? And right now we're seeing an ABC correction here, so we're looking to maybe capitalize on a fifth wave here. But again, you want to let the trading strategy really dictate where your entries are going to be. This is sort of side music that really should accentuate what's going on here. I broke it down into the 2-hour chart just to see if we can find any fifth waves here. So we'll take this as our base for our our 0 point, and we'll say this is 1, 2, and then this looks like our third and fourth wave here up into 5, right? And then say, if we get rid of this for a second, can we break this already third wave down into maybe a 5-wave move as well here? So let's go to a 1 hour chart, and we'll pull this over. And we'll set it up for a 1, 2, 3, 4, 5 impulse move. So we'll say this is a 1, 2, 3, 4, and that'll be our 5th. So you can see that there's overlapping waves in this, and as soon as you get down into here, it becomes a lot more confusing to accentuate the waves. So that's why we like to stick to the higher time frames. But when we break it down to a 4-hour chart, you can see how it really starts to overlap. So here you had your ABC correction. It starts setting up into a greater fifth wave move. So you come up in 1, 2, and then you'll subdivide. It'll break down into a 1, 2, and then another 1, 2 will form. So when you start to see these basing patterns here, where you're seeing these sort of rising wedges, so this low here on this 2 is going to be above the low on this 2, and is going to be above the low on this 2. As soon as it breaks, you're looking at some sort of ABC pattern that just hasn't finished yet. But when you start to break above this, when you see already a 1, 2 formed, and then another 1, 2 sort of right overlapping it, consolidating, right, and then another 1, 2 slightly above that, you know that this breakout is going to be significant if it does happen. And you will see false breakouts where it'll just pop up maybe and then come back down, but that's recognizing this was an A and then that was a B and then it was down into a C. But as soon as you see some follow through, you see your TTM squeeze firing, you see a rising RSI here, you'll see that nice flow is what you wanted to capitalize on. And that is why Elliott wave is more of a art than a science. And when we pull up our Fibonacci retracements here, we'll start to see how this might form out here. So when we increase it, and we'll say that was the bottom. So right here is sort of the trigger entry here, right maybe where this RSI crossed over, and you started to see some follow through here. So once it gets into there, you're looking to take your first half of profits at the 1.618 and maybe the second half at the 2.618, and you can see how it all starts to come together in the end, right? So you would have taken off your other half of profits here, and that way you're taking some up on the way off, and then you're not following through and getting caught as this thing's declining, right? So if your other half was taken off here, you wouldn't have to worry about losing profits on the way down. Thank you very much for your time, guys, and God bless.